In the 21st century, economic systems are increasingly shaped by rentier capitalism, an era where ownership and control of assets, rather than productive activities, determine wealth accumulation. This shift challenges traditional capitalist paradigms and raises critical questions about equity, power, and the sustainability of global economies. But what exactly is rentier capitalism, and how does it shape the future? Let's first understand what is rentier capitalism. Before we proceed, please don't forget to subscribe to our channel, Sociopedia. Rentier capitalism refers to an economic system where significant income is derived from owning assets, such as land, intellectual property, digital platforms, or financial instruments, rather than engaging in productive activities. The term rentier originates from the French word rentier, denoting individuals who live off unearned income from investments or rents. Classical economists like Adam Smith, David Ricardo, and Karl Marx were critical of rent-seeking behavior, viewing it as parasitic to the economy. In their frameworks, rents referred to excess income derived from monopolistic or privileged control over resources. In contrast, contemporary rentier capitalism has expanded its reach, embedding itself into the global financial and technological landscape. The key features of rentier capitalism are: Number 1. Asset ownership as power. Under rentier capitalism, the concentration of wealth lies in the hands of those who own or control critical assets, whether tangible like land, housing, or intangible like data or intellectual property. For instance, real estate. In cities worldwide, housing prices rise due to speculative investment, benefiting landlords while excluding millions from affordable housing. Equally, digital platforms like Google, Amazon, and Meta monetize data, turning user behavior into a highly lucrative asset. Number 2, financialization of economies. The increasing dominance of financial markets and institutions over traditional economic activities intensifies rentier capitalism. Companies prioritize shareholder value and stock buybacks over productive investments, amplifying income inequality. Number 3, monopolistic and oligopolistic tendencies. Monopoly power allows corporations to charge rents on essential goods and services. For example, pharmaceutical companies leverage intellectual property laws to inflate drug prices, while tech giants use patents to stifle competition. Number 4, dependence on passive income streams. Wealth increasingly accumulates through rents, dividends, and interest, rather than wages or entrepreneurial innovation. This dynamic maintains economic inequality and creates a stark division between asset owners and the working class. Therefore, the socioeconomic implications of rentier capitalism are that it aggravates wealth gaps by disproportionately rewarding asset holders. According to Oxfam, the richest 1% of the world captured nearly 2/3 of all new wealth created between 2020 and 2023. Equally, rentier capitalism entrenches privilege in the intergenerational transfer of wealth, making it increasingly difficult for lower-income groups to escape poverty. Access to education, housing, and healthcare is often dictated by the ability to pay rents. It also exerts outsized influence on political systems, shaping policies that reinforce rentier elites' economic dominance. Lobbying for favorable tax policies, deregulation, and intellectual property protections are common strategies. With automation and gig work on the rise, traditional jobs are being replaced by precarious, low-wage work. Workers are increasingly disconnected from the benefits of economic growth as profits are channeled towards shareholders and asset owners. Rentier capitalism also prioritizes short-term profits over long-term sustainability. Land speculation, resource extraction, and the commodification of natural assets contribute to ecological degradation and climate change. Now the question is, who owns the future? The future under rentier capitalism is shaped by those who control the assets that define modern economies. This raises crucial questions. Will tech giants dictate the flow of information and wealth in the digital age? The control of data and algorithms resembles a form of digital feudalism, where users generate value without ownership. Likewise, in healthcare, corporations patent life-saving drugs and gene-editing technologies, potentially monopolizing the future of medicine. And as governments turn to market-based solutions for climate change, rentier elites increasingly control renewable energy, carbon credits, and green technologies. Critics argue that unchecked rentier capitalism threatens democracy, equity, and sustainability. Reform is possible, but it requires bold systemic changes, including progressive taxation on wealth, land, and capital gains can reduce inequality and fund public investments. Economist Thomas Piketty advocates for global wealth taxes to curb the concentration of wealth. By the same token, antitrust laws should be strengthened to dismantle monopolistic power in key industries, from big tech to pharmaceuticals. Encouraging competition and innovation can curb rent-seeking behaviors. Similarly, providing universal access to healthcare, education, and housing can reduce dependence on private markets and ensure basic human rights. Initiatives like cooperative housing, employee-owned businesses, and community land trusts can distribute wealth more equitably. Reforming intellectual property regimes to prioritize public benefit over corporate profits can foster innovation and reduce monopolistic practices. Finally, addressing the environmental impacts of rentier capitalism requires transitioning to a sustainable, low-carbon economy. Public ownership of green infrastructure and fair distribution of climate costs are essential. Altogether, rentier capitalism poses profound challenges to economic justice and sustainability. The concentration of wealth and power in the hands of asset owners threatens to undermine democracy and exacerbate inequality. However, a future shaped by collective action, equitable policies, and systemic reform offers hope for a more inclusive and sustainable world. The question, who owns the future, is not just about economic systems, but also about societal values. By prioritizing fairness, innovation, and sustainability over profit and monopoly, we can reclaim the future from the clutches of rentier capitalism. Thanks for watching. Please do subscribe to our channel, Sociopedia.